Thanks, Tony, and thank you, Kerry and the team, for putting it on. It's been very informative so far. Kin Mining, and we'll get straight into this. I'm doing this presentation essentially in two parts today. The first part is a reiteration of what exists at the site at the moment, at the project at the moment, a pre-feasibility study that we completed in August. And then I want to spend the back half of the presentation on the exploration opportunity that I think is one of the best ones that I have seen in the West Australian goldfields in my 30-odd year career. Corporately, we are 507 million shares on issue, a market cap of about $20 million today, $1.5 million cash at the end of September, and we're in the middle of a capital raising at the moment, fully underwritten by the major shareholder for $3.1 million that'll go into the exploration effort over this next period of time. We have a large proportion of our register, 50% of the register is owned by the top 4 shareholders, all high net worths, all gold bulls, and so the talk in this last 2 days of gold going northwards of 2200 will be music to those gentlemen's ears and music to the ears of Kin shareholders. Feasibility study, and it has to be said that Kin had a false start on its project development back in early 2018, late 2017, and we redid the feasibility study after suspending construction of the project. These are the outcomes of that feasibility study. It's an 8-year life project, about 50,000 ounces a year of production. There's opportunities to improve the economics that you see on the slide there with some higher grade material that's in near mine positions but isn't in reserve or resource yet. But at $2,000 an ounce, and the pit designs were done at $1,800 an ounce here, but at $2,000 an ounce you end up with $128 million worth of pre-tax operating cash surplus, all-in sustaining costs of $1,442. You can see the leverage to rising gold prices, so we end up at about $200 million worth of free cash flow on that $2,200 price, and it's straight line economics from there on. Rates of return, 17% and 29% respectively. Where is the project at the moment? We own our own processing plant. We purchased the second-hand plant of Lawlers from Goldfields Limited. It still sits at the Goldfields site, about 150 kilometres north of the Cardinia site, and you can see the state of construction when construction was suspended. Part of the tank farm's been built. The workshop there is full of all the equipment, buildings on site, so it is ready to go when the board decide to press the button or repress the button on the construction. So the sort of summary of where the project is at the moment is we are getting it into a construction-ready situation for early 2020, and you can see on the map of that slide that there's about 2.5 million ounces sitting within 50 kilometres of the proposed Cardinia processing site. That 2.5 million ounces are owned by all the juniors, and none of them have a pathway to treatment at this point in time. And there's a lot of consolidation, and there's a lot of talk of consolidation going on in this relatively separate ownership that exists around that Leonora area. Obviously, Sons of Gawler are the large player in the region, owned by St Barbara, but there are a number of other significant players in the region who are all searching for opportunities, and there's been lots of discussion. I can't go into any of those in detail, obviously, but there is a fair bit going on in this Leonora area right at the moment, and Kin sits at the middle of that whole discussion. Really, the majority of the talk I wanted to do was spend some time on the exploration and the geology that we see there. It's been ignored largely for the most part of the last 20 years in various ownerships. And I'll point out a couple of things, so if I lose you in some of the geological gobbledygook, then my apologies. But in the whole of the Eastern Goldfields, just about every large deposit, and large deposits to me are northwards of 2 million ounces in a single deposit, they all sit within about 15 kilometres of these major structures. The major structure in our particular situation is called the Keith-Kilkenny Shear Zone. It lies, it's this large coloured or vertical structure that sits in here, and it goes it's about a 400 kilometre long structure. It goes down to the Moho, down through the crust, and it's the structure that has led to the majority of the gold mineralisation, certainly over all of the Kin ground and the surrounding ground. But to the north at Thunderbox, it's resulted in 8 million ounces there. Further south at Carosue Dam, another 100 kilometres further to the south east of us, Carosue's at sort of 4 or 5 million ounces now. So all of the big deposits in the region, and they're at various spacings along that structure, all lie on one side of that structure, and they all lie within 15 kilometres of it. And the big deposits in this particular part of the world will have that same feature. There is a lot of gold mineralisation spread across that entire tenure. It varies from Mertondale in the north all the way to Webster's in the south, a distance of 50 kilometres, and on Kin's ground from Gambia Lass in the west to Hob in the east, a distance of about 10 kilometres. So very widespread mineralisation over the whole of the block. If I then break that picture into the bits that have outcrop and the bits that are covered, the outcrop is the sort of the yellow colour that you see, and all the little black dots are the old historical gold mines, which is where all the exploration has been on this entire block in the last 120 years. So the old timers were able to come through the bush, find the little high grade mine, plus half an ounce production grade, but they were only able to find that where it wasn't covered. Now a lot of the cover, which is the coloured part of the tenement holding there, covers in excess of 60% of the tenement holding, and has had either very ineffectual exploration in the modern era or no exploration in the historical era. And there's no reason why the 1.2 million ounces in production and existing resource inventory that sits on all the yellow bits shouldn't be repeated in the bits that are covered. Now, when I talk about cover, cover there is between 1 and about 5 metres of aeolian sands and lake sediments. So it's not particularly deep. We're not talking about large cutbacks to discover some of these higher grade materials. Despite the fact that there's only been limited exploration in this area, there are a number of in excess of 5 and 10 gram intersections over large tracts of the ground. The pink dots and the magenta dots, they might be a bit tough to see the magenta ones, but they are all 5 and 10 gram intersections over minimum of 2 metres outside the mineral resources of 841,000 ounces. So they're extensive. They haven't been followed up. They're typically shallow 10 to 50 metre drill holes around old workings, but they're single or, in some cases, a few RC holes drilled in the 1980s that simply haven't been followed up with any systematic exploration. So there's a number of walk-up drill targets already on the ground. If we wanted to go out there with a drill rig and start spudding holes into them, I'm sure we'd be able to turn some of those into resources, but we have a somewhat different approach to it. This is another illustration of the potential of the area. While there's extensive drilling and a lot of it's quite shallow in and around, and this is the Cardinia area, so lots of mineralisation in the upper 50 metres, the vast majority of which is supergene. But once you start looking below 100 metres, on the panel on the right-hand side of the slide there's very, very few drill holes, and almost all of those drill holes have been drilled by Kin in this last 12 months. Around the Cardinia project in the centre of the slide and the Helens project on the right-hand side where you see the high-grade intersections. So from a belt maturity point of view, it's actually had very, very little systematic exploration to discover where the large, significant deposit is going to be. Some of the work that we did in this last 12 months, and the geological team have done a fantastic job there. They've really turned the understanding of what Kin has on its head in this last 12 months. So we're dealing with from a geological point of view, a VMS style and a sulphide replacement style of mineralisation rather than your standard Eastern Goldfields mesothermal style. You see on those cores on the bottom right-hand side, it's a sulphide dominant style of mineralisation. High-grade gold, 4 or 5 times the grade of silver as the grade of gold, so we're dealing with up to 100 grams, 130 grams of silver in many cases. Smatterings of copper, smatterings of zinc, tellurium, so it's quite a different style of mineralisation than your standard Eastern Goldfields style. And that sulphide mineralisation is relatively easy to detect with modern geophysical methods. Modern geophysical methods other than magnetics have never been used here, so EM and IP will work particularly well. We're out in the field as we speak doing some trial lines of IP and EM to detect that, see if we can detect these high-grade intersections that we got in the drilling last year. And if we're able to do that, then we'll be out in the field with a much broader program of geophysics to find these large conductors, which the sulphide mineralisation will do. So we're very excited about this. We think this is a real fantastic opportunity for Kin and Kin shareholders to find something very significant here. So in summary, the project's in a situation where we've put it in suspension. It works at the current gold price or higher gold prices. The financial markets have been difficult for juniors, there's no doubt about that. But my expectation with a consistent gold price at the current levels through the Christmas period and early into 2020, the financial markets will be a lot more conducive to financing projects like this. We have a somewhat different view of what the geological prospectivity of the area is. We think it's fantastic, and we believe that we add significantly to the resource inventory over this short period of time with this geophysical program and the drilling program that's slated in for early 2020. And we are in the process of raising the $3.1 million that we've designed to use for just those 2 programs. So in summary, the top half of that slide, it's an 841,000 ounce resource. We've got significant leverage to the gold price. We have significant optionality for doing deals with other juniors in the region. We have a PFS that has very robust and executable numbers that can be delivered in the current environment. We have large areas to explore, many of which are undercover and have had little or no exploration on them over the last 100 odd years. We have a new geological model, and we're out there testing that now for looking for these very large, higher grade mineralisation that we think will add significantly to the project. There is some analysis that says that we are relatively cheap at about $20 Australian per resource ounce enterprise value. Our peers are in the sort of 40 to 50 to 60 range. So Kin's relatively cheap for investors who like a bit of a punt on somebody who will be able to press the button on a project sooner than many others. Thank you very much.